Hello, this is Patrick White from AA Commodities and Investments with your Wednesday, August 21st market recap video. As you can see here, we had a lightly bullish day with corn up 1.5 cents on the December contract at 370 and a quarter. November soybeans closed up 4 3/4 cents at 873, and D's wheat closed up 1.5 cents here at 468. I'm going to go ahead and get it started off with a disclaimer here. Just remember that anything that I say here is not a direct trade recommendation. It's just my opinion. If you'd like to read the full disclaimer, please pause the video now. All right, so as you can see here, we had a little bit of a positive day in the markets with both grains and livestock for the most part. Diving into the chart here, we had D's corn, really not a whole lot of action today. Yesterday, we had the failed test higher and the close below the 370 mark. Today, we failed to find new sellers below that 370 mark, and the market was just a little bit bid. It was just a little bit of short covering, a little bit of a dead cat bounce. Not a whole lot that bulls can hang their hat on here. Going forward, I guess we're going to be looking at the Pro Farmer Yield Survey and seeing if we can get any light from that. But I think that the corn market, it's been beat up with just with the loss of demand and the supply issues not being as large as what a lot of people thought. So with that being said, I think down the road yield can be cut, but that's not going to be talked about here until the September 12th WASDE report. So. And with that being said, though, Pro Farmer has come in, below the USDA, with both corn and soybeans. But with that being said, they're always light, and the algos obviously they're not trading that. They trade what the USDA has to say. So along with that, the soybean market here, we had soybeans up 4 3/4. We closed at 873. Really not a whole lot of action happening. We've been basically stuck in this range in between 877 and 865 for the last 3 days. If you take a look at like the 15-minute chart. Kind of interesting here. Yesterday we tested the 875 level and struggled to close above there. This morning on the open, tested 875, fell off, and then again there at noon we tested 875 again and fell off. So really the market just doesn't want to get above this 875 level, and they've just tested that multiple times and fell off of there. So I would think the 875 to 880 would be a good solid resistance zone there. Obviously, these lows down here, like 865 or so, 866, are going to be looked at as some pretty strong support there. So that's what I'm watching on the November soybeans chart. And going on into the wheat market here, broke the 470 level, and that kind of acted the same way as 370 did in D's corn. So this is December wheat, December Chicago wheat there. We broke the 470 level, couldn't find new sellers, ended up closing just fractionally higher here today. We were up 1.5 on the day at 468. Market went down and tested almost down to that 460 level. 461 3/4 was the low on the overnight there. So I would think that the 460 level should be tested here in the future. And there's not, like the corn market, it's great that we had a bullish day, but certainly not signs of a reversal at this point. Going on into the livestock markets here, we've got cattle. They've been bidding up here lately. Just packers are starting to bid back up for the cattle. They're trying to, slaughter as many cows as they can here with, just with the profits and stuff that they've been seeing. I've heard anywhere from $350 to $750 a head is what they're making. Obviously, with that kind of incentive, the market really has done a good job of, regaining, I should say, the kill capacity that was lost from the Tyson fire. I mean, the packers are just going crazy trying to get as many animals as they can through the plant just because of the amount of money that they're making. So this time, at this time, they're starting to bid up. It was nice to see this push in the October live cattle contract up to 101. Obviously, we found some sellers up there. There's obviously some solid resistance up there at 101, but, it was nice to see that nice positive day yesterday followed by today. And I think if we can get above that 101 level, we're probably headed up to this 103.45, 103.50 level. So those are the two levels I'm watching. Obviously, if you're long in here, you do not want to be a long past $98, in my opinion. Going on into the hog market here, tested higher yesterday, could not hold the gains here today. It looks like we're going to be in the bottom end of the range here. Towards the end of the week, we had resistance and got above that at 64.50, and we closed back below it today. So I think we're just going to continue on this range until we find out more information on either China trade or have better exports. And from what I've heard, in the fourth quarter, the Chinese are going to have a protein squeeze with their in regard to the African swine fever. So We'll see what happens down the road there, but at this time there just is not the pork export demand needed to offset the supplies that we've got in the U.S. So things definitely could change, but as long as we're in this trading range, not a whole lot has changed. So between $62 and $68.70, I'm looking between there. That's our range. I think between $64.50 to $65 and $62 is probably where we're going to be at towards the end of the week here. In cotton, interesting chart here. We went up and we tested the $60 mark, tried to get sellers below there, and they reversed it higher. So we're right up next to that $60 resistance level again. Can they get above $60? You know, I guess the forecasts and things for the Texas Panhandle. That's a large cotton growing area in Texas. The reports there, the forecasts have been for higher than average moisture for the next 2 to 3 weeks there. So we'll see, you know, if that moisture comes to fruition or not. If it doesn't, I would imagine we'd be able to break out of this. But I think the $60 mark is kind of a nice psychological resistance level as well. And we'll see where the traders want to take it. If we can get above 60, I think we'll probably headed to number 1, 61.60. That corresponds with this low over here seen on July 18th. If we get above there, probably headed to 62.50, and I like that resistance area a lot better. So that's about all I got. If you guys, want to give me a shout here, you can go ahead and visit aacommodities.com. You can sign up for my newsletter. I send out a daily newsletter on corn, soybeans, wheat, and cotton. If you want to sign up for that, you can go ahead and do that. Otherwise, get a lot done out there today. Have a great day. Thank you.